So you may have seen in the news or heard from your loan officer that the FHFA, the Federal Housing Finance Authority, added a 0.5 point hit to refinance loans. But what does that actually mean to you as a homeowner or as a home buyer? Does it even matter at all? In today's lesson, I'm going to break it all down for you. Hey, it's Robert Weinberg, and on this channel we empower people to take control of their future through expert mortgage and financial strategies. In this lesson today, I want to bring you some breaking news about a fee that was added to refinance loans, but it really affects everyone that's getting a mortgage. So we'll talk about why. First of all, I pulled up a couple news articles here that I want to just give you the lowdown on. So the long and short of it is that the FHFA, which is the Federal Housing Finance Authority. They're the governing body that regulates Fannie Mae and Freddie Mac. They actually make all the conventional mortgages in this country, which are like 75% of the loans, I believe, in the United States are conventional mortgages. So it affects most people refinancing their homes, and it also affects home buyers, as I'll explain in a second, even though it says it's only added to refinances. So the really crazy thing about this is that they brought this fee in on like 8 o'clock at night on August 12th. Now, I've been doing this a long time, and usually these type of announcements they make during business hours, and they typically are going to give like a month or a couple months notice so you can get all your clients locked, you can get loans closed with the current guidelines, the current circumstances. But this one was done late in the day after business hours, and nobody had time to react. By the time we came in on August 13th, on Thursday of last week, it was already reflected in all of the rate locks. So anybody that didn't have their rate locked before August 12th got hit with this fee. And it's a really negative thing because it makes it so mortgages cost more money to the consumer. They tried to put it in so that it would cost mortgage companies money, but like anything else, if a cost is going to rise for a mortgage company, it's going to be passed along to the consumer. So it's a 0.5 point fee, 0.5%. What that equates to is either an extra 0.5 point in closing costs that you're going to have to pay on your mortgage. So on a $200,000 loan, that's an extra $1,000 in closing costs. The other way that it can be absorbed is through interest rate. So a 0.5 point fee, when it correlates to an interest rate, it's like about 1/8 to 1/4 point, depending on the exact loan term and specifics of the loan that you're getting. But it's about 1/8 to 1/4 point, and that can be a significant amount over the course of a 20 or 30-year mortgage. I believe they calculated the average American homeowner will have an additional cost, again, average to the whole United States, of $1,400 for the average American homeowner. Now, you may be thinking, oh, well, I'm buying a house, so I'm not refinancing. This is only a fee for refinancing. And that part is correct, but it still affects you, and here's why. Because this was a kind of a sneaky move made by the Federal Housing Finance Authority, what's happened is that loans that were already locked but are not going to close until early or mid-September, they're going to still be hit with that fee. And the problem becomes that the mortgage company that's doing your loan is going to have to absorb that fee. Well, if they have to absorb that fee because your rate was already locked, then they're just going to raise costs across the board on everyone. The money has to come from somewhere. So it's my expectation that even people buying homes will have, maybe 1/8 or a fractional percentage that their mortgage will go up in cost to help buffer some of this money that was actually absorbed by these mortgage companies. I heard of, one mortgage company that was on the hook for something like $150 million just by having this extra 0.5 point fee assessed on their loans. I think it was a bad move. I think it was a sneaky move. The way that it was put in play was just really a backhanded slap to the American consumer, the American homeowner, in a time with the pandemic going on and trying to save people money, and the government supposedly doing things to support that, yet it's actually a scenario where this is stifling people's ability to refinance. This is hurting people that are trying to refinance. This is taking money out of the American homeowner's pocket and putting it into the government's pocket, okay? Now, look, why did they do this? Well, the reasoning that I've heard is because they're calling it an adverse market fee. So they've had to take some hits, they meaning the FHFA, because of all the forbearances going on. They see the downturn in the economy. They see a future potential of foreclosures, of people not making their mortgage payments, and of continued economic turmoil. So by them adding this fee, you're literally talking about billions of dollars a month in their pocket by putting this fee in play. And what that allows them to do is buffer, and pad their bank account so that if and when there are foreclosures, more forbearances, other issues of people making their mortgage payments, they've got the wherewithal, they've got the reserves in play to not have it make a big difference. And that's really their excuse as to why they did it. So I'm not really mad that they did it. I'm more mad at the way that they went about doing it and the timeline, where they just slapped it in starting September 1st, but it affects loans already in process, because the way a mortgage works, it's not like you go in on a Monday and close on a Tuesday. It takes weeks or months to close on a mortgage. So even people that already had rate locks in place and were closing are still going to be affected, and were affected by this fee. I know that every banking association is against it, as it says in this article. There's been letters written to Congress about this. They've wanted it to be rolled back. I mean, the White House has gotten involved even to say that this should be rescinded, as it says here. It hasn't been done yet. It's been over a week now. There's been no new information. It doesn't look like it's going to be rolled back. So if you're somebody who went ahead and refinanced in the last couple months before this, pat on the back to you, because you were decisive and you took action when you needed to. This is the type of thing we have no control over as mortgage professionals, as loan officers and originators in this market. This is handed down from the federal government. So because we have no control over any of this stuff, this is why when you see a mortgage that makes sense, when you see a refinance where the numbers work for you, be decisive, move forward right away, get it done, because you never know when something like this can come up. And it can totally throw a wrench in your refi. Or maybe you were saving $200 a month, and now because of this, you're only saving $160 or $170 a month. That's the type of difference we're talking about here, okay? So I hope that this helps. I hope it gives you some industry insider insight on what is going on and why maybe your interest rate isn't as low as you thought it was based on what you saw a few weeks ago. This is a conversation I've had to have with many clients that have asked that question. And if it's your first time watching our channel, please go ahead, hit subscribe, hit the bell, get notified on all of our future content. If I can be of assistance to you or anyone that you know, if you're buying or refinancing a home, please reach out to me via private message, text, or call. We'll talk to you soon, and